Hello everyone, welcome to the market opening bell for Friday, April 17th, 2026, your 10-minute guide to the stock market. Mainland China's first quarter economic growth exceeded expectations, lifting Hong Kong stocks higher. The Hang Seng Index opened 175 points up and extended its gains during the session, once rising as much as 455 points to a high of 26,403 points. It eventually closed up 446 points or 1.7% at 26,394 points. The A-share index rose 186 points or 2.1% to close at 8,905 points. The Hang Seng Tech Index surged 180 points or 3.7% to finish at 5,092 points. Total market turnover reached 256.2 billion Hong Kong dollars. Southbound funds net purchased $4.291 billion worth of Hong Kong stocks. They net bought 2.683 billion of the tracker fund, 858 million of Alibaba, 340 million of Sinok, 194 million of PopMart, and 108 million of Sunce. On the selling side, they net sold 1.151 billion of Xiaomi and 521 million of Tencent. Statistics show that southbound funds have net bought Sinok for 5 consecutive days, totaling $1.293 billion. Net bought PopMart for 3 consecutive days, totaling $1.381 billion, and net sold Tencent for 4 consecutive days, totaling $2.973 billion. The Hang Seng Index has finally successfully broken above the 26,000 point level and surpassed the key resistance at 26,300 points. It has now returned to the trading range between 26,300 and 28,000 points, with the next short-term resistance level at 26,700 points. The 3 major A-share indexes opened higher and kept climbing, with the Chinex index performing particularly strongly, rising more than 3% and reaching a new high in nearly 11 years. The Shanghai Composite Index closed at 4,055 points, up 28 points or 0.7%. The Shenzhen Component Index closed at 14,796 points, up 297 points or 2%. The Chinex Index closed at 3,626 points, up 111 points or 3.1%. Combined turnover in Shanghai and Shenzhen markets totaled 2.3466 trillion yuan. The renminbi central parity rate against the US dollar was fixed at 6.8616, down 34 pips from the previous day. China's economy got off to a strong opening red in the first quarter of 2026, with overall performance beating market expectations and showing solid resilience. First quarter GDP grew 5% year-on-year, higher than the market forecast of 4.8% and 0.5 percentage points faster than the 4.5% recorded in the fourth quarter of 2025. However, monthly data indicated some cooling toward the end of the quarter. In March, industrial production grew 5.7% and retail sales grew 1.7%, both slowing from the previous 2 months and falling short of expectations. Fixed asset investment rose 1.7% year-on-year, below the expected 1.9%. Private fixed asset investment declined 2.2%, suggesting that private sector confidence still needs further support. The average urban survey unemployment rate for the first quarter stood at 5.3%, unchanged from the same period last year, while the overall employment situation remained stable. In March, the urban surveyed unemployment rate was 5.4%, higher than the expected 5.2%. The market widely expects the government to continue implementing proactive and effective fiscal policies in the coming stage and may further strengthen the recovery foundation through reserve ratio cuts or interest rate reductions. Hong Kong's tourism and catering stocks rose together. Trip.com gained 4.8%, Tongcheng rose 4.1%, and Haidilao jumped 6.8%. With the May Day Golden Week approaching, policy support, holiday effects, and expectations of internal reforms are expected to continue driving the catering sector. In early April, the Ministry of Commerce and 9 other departments jointly issue the 226 Service Consumption Quality Improvement and Benefit the People Action Work Plan, which proposed 64 specific tasks and measures across 6 areas covering traditional service consumption sectors such as catering and accommodation. Big data from the Ministry of Commerce showed that during the Qingming holiday, daily sales of national key retail and catering enterprises grew 2.4% year-on-year, and bookings for the May Day holiday are heating up. CATL announced that it will hold its 2026 CATL Super Tech Day next Tuesday at 7 p.m. Separately, report says CATL is actively seeking removal from the U.S. Department of Defense list of Chinese military-linked companies. CATL co-chairman Pan Jian has visited the United States twice since last year to lobby for the company, including a meeting with Pentagon officials in Washington in March last year. 2 months after CATL was added to the list, Pan Jian and his team told U.S. officials during a meeting that the company's batteries would not be used by the Chinese military. They presented a video and provided extensive documentation as supporting evidence. Ganfeng Lithium issued a profit alert forecasting net profit attributable to shareholders for the first 3 months of the year to range between 1.6 billion and 2.1 billion yuan, swinging from a loss of 356 million yuan in the same period last year. The turnaround was mainly driven by the rapid development of the global new energy industry, strong demand growth from downstream customers, a sharp rise in lithium salt production prices, continued expansion in the power, battery and energy storage markets, and a clear increase in production and sales volume of lithium battery products. In addition, the rise in the share price of PLS, held by the company, generated an overall fair value gain of approximately 259 million yuan after hedging. Ganfeng Lithium stated that its current cell capacity utilization rate is high, and energy storage battery shipments are expected to maintain rapid growth in 2026. This year, overall lithium industry demand has grown well, but supply has faced many challenges, leading to a relatively tight supply-demand balance for lithium products. The company believes that currently high oil prices may accelerate the replacement of traditional energy by new energy sources, further boosting medium to long-term demand for lithium products. Alibaba's Alibaba Token Hub ATH team announced on the social platform X that its new AI model, Happy Oyster, has open early access. It supports real-time world creation and interaction, and users can now apply for the experience on the official website. This is another product launched by Alibaba ATH after Happy Horse, extending its focus from video generation to interactive world meet models. Happy Oyster can create 3-dimensional interactive video output, which can be used for developing video games and creating film content. The AI model evaluation platform LM Arena yesterday released its latest video edit leaderboard, in which Alibaba ATH's model Happy Horse 1.0 ranked first with an ELO score of 1,299 points, surpassing international mainstream models including Elon Musk's AI chatbot Grok. TSMC reported first quarter net profit grew 58.3% year-on-year to a record 572.4 billion new Taiwan dollar, beating expectations. Revenue rose more than 35% year-on-year to $1.134 trillion, benefiting from the continued rapid development of global AI infrastructure. TSMC expects second quarter sales to range between 39 billion and 40.2 billion US dollars, above expectations, with gross margin between 65.5% and 67.5%. Full-year capital expenditure is expected to approach the upper end of the 52 billion to 56 billion US dollar range, and sales in US dollar terms are projected to grow more than 30%. TSMC stated that its helium and hydrogen supplies come from multiple regions, so short-term raw material supply should not be affected, although the company's profitability may still be impacted by the situation in the Middle East. According to reports, global memory chip giant SK Hynix is accelerating its U.S. listing plans and aims to issue ADRs in June or July. The company is preparing a U.S. roadshow, which is expected to take place after it releases its first quarter results in late April to test market demand. The market is now watching the potential fundraising size, estimated at around $10 billion. Listing ADRs in the U.S. would improve liquidity and help narrow the valuation gap with its American peers. SK Hynix is currently trading at the forward PE ratio of only 3 to 4 times. Philips Securities offers trading services for Taiwan and Korean stocks. Today, 2 new stocks will begin trading. G-Pixel, Changchun Microelectronics, stock code 3277, closed at 68.3 Hong Kong dollars in Philip Mark's grey market yesterday, 71.3% or $28.42 higher than its listing price. Excluding handling fees, each lot of 100 shares made a paper profit of $2,842. G-Pixel Changchun Microelectronics is a provider of CMOS image sensors, CIS, and focuses on the research and development of CIS. A series of CMOS image sensor products are mainly used in industrial imaging, scientific imaging, professional imaging, and medical imaging. The products feature large target surface, high resolution, high sensitivity, high dynamic range, low noise, high frame rate, line frequency, and high quantum efficiency. According to Frost & Sullivan data in 2024, G-Pixel Changchun Microelectronics ranked third globally among CIS companies in industrial imaging revenue, holding a 15.2% global market share. It also ranked third in scientific imaging revenue with a 16.3% global market share. Both the industrial imaging and scientific imaging CIS markets are dominated by a small number of international and regional leaders. Based on the company's 2024 revenue, industrial imaging CIS and scientific imaging CIS accounted for approximately 2.1% and 0.8% of the global CIS market, respectively. Many core technology closed at $19.6 in the grey market, 157.2% or $11.98 higher than its listing price. Excluding fees, each lot of 500 shares made a paper profit of $5,990. Known as one of the 6 little dragons of Hangzhou, Many Core Technology is a leading cloud-native spatial design software provider in China. Based on 2024 revenue, it holds a 23.2% market share and ranks first in China's spatial design software industry. Its design solutions can be directly converted into production-ready drawings, connecting seamlessly with back-end automated production processes to achieve integration from design to construction and manufacturing. Its applications include home renovation and office building design. Trump says Israel and Lebanon have agreed to a 10-day ceasefire. U.S. stocks rose in a choppy session. The panic gauge fixed index fell 0.23 points or 1.3% to close at 17.94 points. The S&P 500 rose 18 points or 0.3% to 7,041 points. The Nasdaq climbed 86 points or 0.4% to 24,102 points, marking its 12th consecutive gain, the longest winning streak since 2009, and closing at a new record high alongside the S&P 500. The Dow Jones Industrial Average gained 115 points or 0.2% to close at 48,578 points. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks listed in the U.S., rose 123 points or 1.6% to close at 7,192 points. Major technology stocks traded mixed. Tesla gave back 0.8% on Thursday after surging nearly 8% the previous day. Apple fell 1.1% and Nvidia dipped 0.3% while Amazon rose 0.5% and Meta gained 0.8%. Intel jumped 5.5%. According to reports as of the end of last year, Alphabet held a 6.11% stake in Elon Musk's SpaceX. If SpaceX were to list at the targeted valuation of $2 trillion, Alphabet's stake would be worth approximately $122 billion. However, following SpaceX's merger with Musk XAI in February, Alphabet's ownership percentage may have been diluted. It is now estimated that Alphabet currently holds around 5% of SpaceX, with the stake valued at approximately $100 billion. PepsiCo rose 2.3% after reporting better than expected quarterly earnings. The company's first quarter net profit increased 27% year-on-year to $2.33 billion, with adjusted earnings per share of $1.61, beating expectations of $1.55. Revenue grew more than 8% to $19.44 billion, exceeding the consensus forecast of $18.94 billion. In North America, PepsiCo cut prices on snacks such as Lay's potato chips by as much as 15%, resulting in a 2% increase in snack volume, while beverage volume declined 2.5%. The company reaffirmed its full-year guidance, expecting organic revenue growth of 2 to 4% and core constant currency earnings per share growth of 4 to 6%. PepsiCo noted that the global economic outlook has become more uncertain due to the impact of the war in the Middle East. Netflix released its first quarter results after the market close. Revenue rose 16% year-on-year to $12.25 billion, beating expectations of $12.18 billion. Net profit nearly doubled to $5.28 billion, with earnings per share of $1.23, well above the expected $0.76. Netflix said the main drivers of the profit growth were revenue exceeding forecasts and the receipt of a $2.8 billion termination fee after the failed acquisition of Warner Bros. Discovery, however, the company guided second quarter earnings per share at $0.78, below the consensus forecast of $0.84. In addition, chairman and co-founder Reed Hastings will step down from the board after 29 years to focus on philanthropy and personal interests. Netflix shares fell about 9% in after-hours trading. U.S. industrial production fell 0.5% in March, contrary to market expectations of no change, following an upwardly revised 0.7% gain in February. The industrial capacity utilization rate stood at 75.7 in March, lower than the expected 76.3. In the week ended April 11th, the number of Americans filing for initial jobless claims dropped to 207,000, below the forecasted 215,000 and marking the largest weekly decline since February. The previous week's figure was revised down to 218,000. This suggests that layoffs remain limited as the labor market and the broader economy continue to show resilience. Our stock pick today is Luye Pharma, stock code 2186. Luye Pharma is an international pharmaceutical company dedicated to the research and development, production and sales of innovative drugs. The group has established R&D centers in China, the United States and Europe. It currently has over 30 domestic pipeline products under development and more than 10 pipeline products for other international markets. The group maintains world-class standards in advanced drug delivery technologies, including microspheres, liposomes, and transdermal drug delivery systems. It has achieved multiple innovative breakthroughs in new molecular entities and antibodies, and is also actively pursuing strategic development in cutting-edge fields such as cell therapy and gene therapy. The group is building a global supply chain with 8 production bases established worldwide and has implemented a good manufacturing practice (GMP) quality management and control system that meets international standards. With over 30 products covering major therapeutic areas such as central nervous system, oncology, cardiovascular, and metabolic diseases, among which 19 major products have established strong competitive advantages in high-incidence disease areas globally. The group's business now reaches more than 80 countries and regions. These include the world's largest pharmaceutical markets, China, the United States, Europe, and Japan, as well as fast-growing emerging markets. In the Chinese market, the group's major products hold competitive positions across its 4 key therapeutic areas, namely oncology, CNS, cardiovascular, and metabolic. Notably, its oncology, metabolic, cardiovascular, and CNS drugs rank as the first, second, fourth, and fifth largest drug markets in China, respectively. In international markets, the group's products are primarily positioned in the central nervous system therapeutic area. For the year ended December 31st, 2025, the group recorded revenue of 6.308 billion yuan, representing a 4.1% increase compared to 2024. Despite pricing pressure on existing products, total revenue reached a new high in nearly 5 years, thanks to the approval and rapid growth of new products. At the same time, net profit attributable to shareholders increased significantly from 471 million yuan in 2024 to 618 million yuan, a rise of 31.1%. This reflects a marked improvement in profitability, driven by the launch of high-margin new products and effective cost control. With rapid sales growth from newly approved products over the past 3 years and more new products expected to be approved and launched in the future, the group anticipates that both revenue and profit will continue to grow steadily. As of December 31st, 2025, the group had 32 pipeline products in China at various stages of development, including 19 oncology products, 5 CNS products, and 8 other products. In addition, the group has 15 pipeline products in various development stages in the United States, Europe, and Japan. The group will continue to optimize its pipeline structure and increase investment in innovative molecular candidates with novel mechanisms of action. Recommendation: buy at $2.90, target price $3.25, stop loss $2.75. I do not hold the above stock.